Hi everybody, Alex the Pro here from Expert Forex, and in today's video we're going to be looking at what's brewing in my trading laboratory. And on your screen you'll see a process to trade robots successfully. I use this process in my Zero to Hero robot trading course, but I also apply it in my real trading, my live trading. So it is a tool that I use on an ongoing basis, and we'll just go through the rules of this process. Number one is never trade live money until you have demo traded the settings you intend to use for 3 to 5 weeks and have experienced really good results. Very important rule. I see people just going straight into live trading straight away, and that's not the way to go. So to do this, demo trade 20 strategies for 3 to 5 weeks to see which strategies perform well, which ones don't, and make sure that you're using an account and leverage that is in line with the account that you will be using when you trade live. So you start with those 20 strategies. There's no need to change a strategy that is already working and doing well. So after the 3 to 5 weeks, hopefully you will have worked out why some strategies are failing and others are successful. And you need to put a lot of effort into understanding why some are failing and others are successful. And that will allow you to introduce only the very best strategies into your live trading. Now, I'm not suggesting you do that straight after your 3 to 5 week period. You might have to go for another 3 to 5 week period to refine your strategies even more before you go into live. So the whole emphasis here is do your homework first before trading live. Once you've decided which strategies to go live with, use 50% of the lot sizing you used in the demo trading in the first month of live trading. In other words, use half the risk, because it is much easier to increase lot sizing to achieve better results than to decrease lot sizing when you are in trouble and your account is getting blown. So very important rule there. And then repeat this process continuously every month until you have more and more successful strategies. So what happens is your original 20 strategies, some will fail, and what you do is you correct the settings on the failing ones, replace those accounts, and keep on trading until you have 20 successful strategies. You should then have a demo trading account of 20 accounts and a live trading portfolio as big as what you are comfortable with. So that is the success formula for robot trading. You need to invest time. You need to understand your robot. You need to understand what makes the robot successful, and you need to understand what makes it fail. And that investment of time and effort will stand you in good stead over the next 5 to 10 years. Okay, so what am I doing at the moment? Well, I have a few current demo portfolios running, and I have a few planned in the future. Currently, I have the profit retriever alternating strategy. I've got one portfolio running on that. We just started the alternating strategy about 3 weeks ago, and I'm now testing it for live trading. Then I have another one, that's number 2, which also trades the alternating strategy using a slightly different bunch of strategies. Then I have the profit retriever special instruments portfolio, things like gold, silver, indices, and all those kind of things. Those are really special instruments. And then I have the conventional profit retriever decreasing strategy portfolio. And we're going to have a look at these portfolios later on in the video. Then I have some other projects planned. Like, for instance, the Make Money 5-minute strategies. When we launched the Make Money, the 5-minute time frame produced the most amazing results, but we decided not to publish them because they were just too good to be true. We also are also planning to do the Make Money day trading strategy on a 5-minute basis, and also the trend trade on a 5-minute basis. So there's a lot of other things, and as I say, etc. There's a whole lot of other strategies that I will be testing. But the Profit Retriever is by far the most robust robot that I've ever traded. And that's why most of my effort is going into that one. Okay, so how does all of this work? So basically, I have a whole lot of demo portfolios, a huge amount, so most probably about 100 accounts being traded, which I review on a regular basis. The good ones get fed into the linked account service, and you'll see there are already about 90 accounts that you can link your account to, but I also obviously feed it into my own personal live portfolio. Now, out of the linked account service, some will fail and those accounts will be deleted. Lucky enough, there haven't been too many over the last year. There's been, I think, nine or 10 deleted accounts, and then there are some that need suspension, and I then move them into the suspended account portfolio is basically a hospital portfolio where we give those accounts special care and attention, and once they healthy again, they get placed back into the linked account portfolio or my live portfolio. So that's the process that happens, and again, this is the process that I try to teach in the Zero to Hero course, and that is basically where the majority of these linked accounts come from. I'm currently making a big effort to keep the drawdowns as low as possible, focusing on risk management in this particular course. So although they're already in the linked portfolio, I still review their progress, and if their drawdowns tend to go a little bit too high, I do make setting changes and that type of thing. Also, what I do is I share the settings that are used in the linked service. Here you can see I've recently shared 50 of those settings, and there they are, and they are only available to the premium members of the paid forum. So my clients do benefit from all these efforts that I make, and obviously I'm doing this for my own benefit too. Okay, so let's have a look at the demo portfolio that I have, and it has about 24 accounts, and you can see it's doing pretty well. There's only 4 of them are negative, and overall results, you can see the close profit and the open is pretty good. So the overall results are pretty good. It's been running for about 14 days or so, 2 weeks, so it's still young, but I have made some substantial changes here. In a previous video, you'll see there were some very high margin usages. There's one that I need to investigate, for instance, and I've actually eliminated that particular currency out of my portfolio because it was using too much margin, and I might make a video about that one. And then here are some failing ones, not too serious, but I will investigate why these are not doing well and make appropriate setting changes, and we're going to do a few examples of that at the end of the video. But overall, this one's going nicely, and I review it every few days and make changes to these 24 accounts. That's number 1. So let's go to number 2. There's number 2. Now this one is more recent. It's only really, in spite of the days shown here, it's only been going for about just over a week. So it's a little bit early. It's also using a strategy that is a little bit more aggressive, and you can see by the results aren't that great so far there, and you have a lot more negative accounts, but you also have some nice positive ones, and need to work out why these are failing, and make changes in the particular settings and so on. So there's another 24 accounts that I'm trading using the Profit Retriever alternating strategies, and as I say, only when I'm perfectly happy with these type of results will I introduce some of these accounts to the live linked service. Now here we have one that I've mentioned before, the Profit Retriever Advanced Instruments. So these are the ones I mentioned: gold, silver, indices, a whole lot of advanced instruments. There's about 16 accounts there, and they are doing pretty well. There we are. We've got a positive close profit and a positive floating profit. So this one's doing pretty well, but because of the nature of some of these instruments, like the indices, they only trade in a peak period every day. So it's almost like having a weekend gap every single day, because they trade and then they go to sleep, and they trade and they go to sleep. So they slightly less of a continued instruments compared to, for instance, Forex that just trades continuously every day. These indices have a volume peak every day. So when I'm testing these ones, I must probably test these for 2 months rather than the normal 1 month for Forex. But certainly looking pretty good. Need to have a look at why some of the floating profits are negative, and why some of the accounts are negative. But it's still early days with this particular portfolio. And then I have a conventional profit retriever decrease strategy approach. And this one's not doing too badly, but it has some ones that are really doing badly in terms of drawdown. Now, those drawdowns are unacceptable. So what I'm going to be doing there is I'm going to make the changes to the settings to make them generate less drawdown. And then I'm actually going to close that account and open a brand new account in its place, so that the new account can benefit from the changes of the settings and have a nice fresh start. And I can also get rid of all these negative balances over there. So these negative balances have a lot of value in that they tell me which accounts to pay attention to. So as you can see, this is actually a process of continuous improvement. I adjust the settings on a continuous basis to become safer. That's the main thing about my portfolio at the moment. I'm just focusing on safety. I know that the profit retriever will produce positive results. I don't have to worry about the profit side. I only need to worry about the drawdowns. Okay, now here's a typical example of when an account is doing badly, and you can see this one is battling a bit. It's got a drawdown of $5,000. Sounds a lot, but you must also take into account that it has a balance of 23,000. So in other words, this account has doubled itself at some point. So it is a really good account, and the $5,000 looks like a big amount, but it's actually a small amount, percentage compared to the account balance. But it is a problem. I don't want that size drawdown to happen. So what I would do is I would say, okay, we have a problem with this account. What do we do about it? And the first thing I do is I'll look at the chart. You can see there's a lot of cash-ins happened in the past, but the problem started over here. It went into a sell over there, and it just continued selling into quite a strong trend. And there we go. It's selling into this trend. Now, this line here that you see here is the break even, or the get out line. So if the price comes down and touches that line, it will basically close all of these deals at a very small profit. So it's not as bad as it looks, and it was pretty close. It only needed to go down there, but let's just patiently wait to see what happens. Now, what's going to happen with this account is either going to blow or it's going to recover. There's no, you can't, at this point in time, we can't do a single thing about it. But what we can do is we can look at, say, how could we have avoided this $5,000 drawdown? So I'm going to have quickly go through the settings for the profit retriever. And firstly, direction is not a problem, because it's made a lot of money using that direction approach. So I'm not going to fool around with that. It's just, this is hopefully a short-term problem. But we could have reduced the $5,000 in a number of ways. Firstly, the gap size. You see that one is 50. I would most probably change this right now to 65, because 50 is too low. So I changed that. Also, the start level before gap scaling happens. In other words, what happens is you start with a gap, and it will increase the gap as it goes along. Now, you can actually see that in here. You can see the gap as it started, and then slowly it increased and got bigger and bigger. You can see how much bigger it gets. So I'm saying the rate of increase was too slow. I would most probably change that from 2 to 1. So after one negative trade, I want to start increasing the gap size. And I'm not going to do the change I will make is I won't do it by pips, I'll do it by percentage, and I'll most probably use about 120% there. Those are the changes I would start making to the trading. In other words, you'll have fewer open trades because the gap sizes are bigger. Then the big change, the change that would immediately affect this drawdown is this number 0.2 is too high. So I would move that down to 0.15, for instance, 0.15, yeah. So or immediately that gets rid of a quarter of this loss here, because if you're using lower lot sizing, you will also incur lower drawdowns. And then the other thing to look at is most probably the change rate. How quickly do you want the lot sizing to change? This one has a 60% change rate, which I think is fine for now. I would leave that. And what happens, it changes by 60%. So the next time it opens a deal, it would be 60% of 0.15, which I'm going to change it to, and so on until it reaches 0.05. When it reaches 0.05, it will start increasing the lot sizing until it reaches 0.3. So I would look at that one. I'm not sure. I don't think I'd make a change there, and I might not even make a change there because the previous changes are good enough for to bring the drawdown into a more manageable region. But that gives you an example of the kind of thought process that I would go through to get this orange line closer to the price action and not to have so many open trades running at the same time. Now, I hope you've enjoyed this sneak peek into my trading laboratory. I have a much bigger trading laboratory, but I thought I'd highlight just the major areas that we're looking at. The profit retriever is currently my main focus, and after about 7 to 8 months of the link service, I am reducing the drawdowns and making them more manageable as time goes on. Reducing the drawdowns will also reduce the profitability, but I'd rather have a smaller profit and a safer profit than an aggressive one. If you don't like that approach, when you join the linking service, what you need to do is just adjust the linking lot sizing setting. In other words, instead of using 1-to-1 with your signal provider, if the signal provider is trading 1, you can trade 1.5, for instance, and that way you can increase your lot sizing too. So if you're not already a participant in our linking service, I will provide a link in the description of the video, as well as in the first commentary of the video. Now, I hope you found this video interesting, and from me, Alex Deploy, cheerio.